It's so wild considering Alibaba is was a Chinese company, but now is very much a global company. What does this mean from a soft power perspective or reputation for this company that's trying to become a household name? It's very, very concerning for them, I think.
Anthropic told Congress that Alibaba has been running 28.8 million fraudulent cloud conversations to steal its models. Disclosed this week, Anthropic sent a June 10 letter to the Senate Banking Committee accusing operators tied to Alibaba's Qwen AI lab of running 28.8 million automated exchanges against Claude through nearly 25,000 fake accounts over 44 days. So another distillation attack. The campaign from April 22nd to June 5th targeted Claude's software engineering and agentic reasoning capabilities, specifically the abilities in Anthropic's Mythos Prevere frontier model. And Anthropic calls it adversarial distillation, training a weaker model on a stronger one's output. It's the largest model theft campaign Anthropic has ever publicly named, exceeding a February incident involving DeepSeek, Minimax, and Moonshot AI that we also covered, I think, a few months ago. Anthropic also alleged Chinese government complicity. Alibaba denies wrongdoing, and its U.S. listed ADRs fell about 3%. So Anthropic framed this operation as turning hundreds of billions in American AI investment into a subsidy for geopolitical competitors, which is obviously a huge deal. Even more interesting, I think I saw a deal, a bit of news where Meta was caught doing the same thing, testing competitors like Gemini and Claude and OpenAI, actually testing their output and then sending information like specifically with regards to probing for safety, like posing as underage kids threatening to do self harm or do crime, and trying to learn and study these models. So it's happening not just between Chinese and U.S. Companies; it's happening between American and American companies as well.
It's so wild what's unfolding in this foundational large language model landscape, and I think these are issues that many people that use these technologies actively on a day to day basis are unfamiliar with, right? We talked a lot about like protecting model weights for foundational LLM models. Builders that are incorporating this infrastructure able to essentially distill the fundamentals of how this model might reason or work and then use that to train a different model. But here we're seeing something a little bit different, right? We're talking about essentially DDoS attacking or spamming Anthropic's LLM to try and understand how it's reasoning based on the output. And this is something that is completely unavoidable. At the same time, this is also bringing more business to Anthropic. Like they're more profitable as a result of this competitor that sees this opportunity. But if this is true, this alleged model theft. Essentially, what Alibaba is doing is running a calculation saying instead of investing more this money into R&D to try and improve our models, it's also a good investment to try and spend this money on token consumption to try and distill how this reasoning works with this latest model from our competitor. And so you don't really know like if this is a huge problem that needs to be tackled or if it's just something inherently unavoidable because there's money being traded as well. I don't know what to think about this. It's kind of crazy, but this accusation that's pointed towards Alibaba is not great considering Alibaba was a Chinese company, but now is very much a global company with employees across the globe working in different types of business units and applications across the world of technology and finance and other sectors. And you really do ask like, what does this mean from a soft power perspective or reputation for this company that's trying to become a household name? It's very, very concerning for them, I think.
Yeah, absolutely. And like I said, this is the theme of not just this episode, but AI in general, tech in general, right now is this proxy battle going on between China and the U.S. So we're not going to see an end to that anytime soon.
Yeah, yeah, absolutely.
Trump signed two quantum executive orders. The next day, the Energy Department actually promised a working quantum computer by 2028. On June 22nd, Trump signed two executive orders establishing quantum computing as a national priority. On June 23rd, the Energy Department announced Quantum Genesis, a program to build the world's first fault tolerant, scientifically relevant quantum computer by the end of 2028. The target is a machine running 150 to 250 logical qubits with error rates low enough for real scientific work in chemistry, material science, plasma physics, and high energy physics. This computer would be housed at a DOE facility with open access for US researchers. The program runs on three tracks: a DOE Q competition where private firms compete to demonstrate fault tolerant systems, a national quantum supercomputing user facility, and targeted R&D on applications. So technical specs are due later this year, probably in around September or October. Quantum researchers describe the 2028 timeline as one of the most technically ambitious the field has ever faced. A River Lane report found only 600 to 700 people worldwide specialize in quantum error correction. So the industry needs up to 16,000 by decade's end, and training one takes up to 10 years. So very ambitious timeline we're seeing here. I think you and I have been seeing a lot more quantum deal flow on our desks, and also a lot of funds being spun up just to focus on quantum. So it is, in some essence, going to be bigger than AI. Maybe not literally, but this is kind of like the natural timeline, I think, for all these compute resources. They're not just building for AI; they're building for the quantum future.
Yeah, absolutely. This is an interesting story considering that it's, in part coming out of the government. I don't know enough about quantum computing to be dangerous, but I do know what it means for potential applications among research and even applications for AI as well. What we've been hearing about more and more over the past couple of years around quantum computing is the danger to cryptographic technologies, and more principally on everyone's minds, because I think they're all bag holders right now, cryptocurrency and Bitcoin more notably. So, this timeline does kind of like set a stake in the sand saying, hey, this is our target. And maybe this brings a little bit more concern around existing, let's say, front runner blockchains and cryptocurrencies that are under threat by something like this. Also it's going to push innovation. We've been seeing a lot coming out of different blockchain ecosystems claiming that they need to become quantum ready. And so, this is essentially giving them a sort of like deadline to, let's say, overhaul some of their technologies. And I think that's a good thing.
Yeah, absolutely. Let's see. I mean, the government does have to start making policies and putting in directives because it's strictly a game theory thing. Like they know that China and other countries are focusing on this, so it's time to get serious about quantum compute as well.
Yeah, absolutely.
Two of China's most prominent hedge fund managers just called the AI rally a super bubble ready to burst. So nothing new here. We've been hearing a lot of people trying to be the next Michael Burry, trying to say this is the next great bubble that's ready to pop. But this week, two of China's best known hedge fund managers publicly warned that the AI boom driving global equity markets has become an unsustainable bubble, per Yahoo Finance reporting. So the warning lands as US tech stocks posted their worst June since 2022, with Microsoft and Meta both down more than 30% on the month, and Alphabet off 7%, even as the broader market posted its best quarter in 6 years, which is a little bit surprising. So, stock market's doing well, AI companies and Mag 7 companies not doing well. It follows the KOSPI's 10% single day flash crash last week that we talked about in South Korea, and echoes a glowing chorus of AI valuation skepticism in the wake of the SpaceX IPO as well. And that's come down significantly too. I think poor Elon is no longer a trillionaire, at least right now. A UBS report this week also found that billionaire wealth grew 25% this year, almost entirely from AI stock gains. So the bubble warnings are notable, coming from China specifically, where state policy has committed 295 billion to AI infrastructure, meaning these managers are betting against their own government's flagship economic priority, at least on the surface. But like we said before, with all these open source Chinese models coming out, I think it's a great way to kind of sabotage your enemy. If China's saying let's open up everything, any attack on frontier models from the US or from the West is a gain for China. And they're kind of betting that they can pop the bubble. They can enhance and speed up the AI bubble pop because they're not over betting on AI right now. They're just doing what they can to stay competitive. It's the West and these US companies that are really getting ahead of themselves with these valuations, at least in my opinion. I don't know what you think about that, Sasha.
Yeah, yeah, no surprise. It's totally a bubble. What are we talking about? Like, whatever your confirmation bias is around something like the SpaceX launch, and let's call it SpaceX, honestly, an AI company, because it was like that value is speculatively boosted by the acquisition of XAI and Twitter, and you know that alone was very very controversial, because in the span of like 2 years, the valuation of Twitter had gone up 10x because of the formation of XAI, which is arguably a pretty awful foundational LLM. Um, it's a joke that we're talking about multiple $1 trillion IPOs in the same year, and we're talking about as far as like a bubble goes. I think SpaceX really just kind of validated that market liquidity is not there. Everything that they expected around this launch, and we're seeing the after effects of it now. This sort of trajectory of that one publicly traded stock coming down is something that I had seen coming from the day one of that IPO filing. And I don't think that we're going to see anything better around OpenAI or Anthropic's IPO, because their offerings are not as diverse as what SpaceX had. And you can't use the same justifications to reassure yourself that those fundamentals are sound. So I don't think liquidity is there. I don't think that the landscape on both the institutional and retail investor side is going to allow this to continue. And I think we're getting to a point where it's the house of cards might be falling down. I don't really. It's hard to justify that a company like OpenAI that creates a foundational LLM that has some valid use cases, but a lot of the rest is quite speculative and arguably not very effective, and somewhat of a joke, is worth 3 times Toyota. Like, it just doesn't make sense to me. So I think we are at the peak of a bubble, and we've all been saying this for a long time. So it'll be a turbulent market going forward, I think. But that's just my own take.
No, I mean, I agree. I was kind of expecting the house of cards to collapse maybe after these three major IPOs slated for this year. We got Anthropic and OpenAI's IPOs coming soon. I was anticipating that, but it seems like it's already looking shaky just after one of those IPOs, and one of the largest in history so far. Well,
Yeah, I
actually, the
know.
largest in history. Hey, it's your friend Mello from Arcanum Ventures. If you got any value out of this video whatsoever, we want to hear about it. Leave us a comment in the comment section. We look forward each and every week to reading those, and maybe give us a subscribe too, because we put out new content all the time, 4 or 5 videos a week. So maybe check one out now. Take it easy.